Russia's central bank said Wednesday that its gold operations in the domestic market have increased sharply as liquidity improves and sanctions force the state to rely more heavily on yuan and gold to manage fiscal reserves. The shift signals a larger structural turn inside Russia's financial system, where gold is taking on renewed transactional and business importance.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Gold Fix Market Rundown. It's 8:07 on the 20th, Thursday. And today at 8:30, I believe, you're going to get the jobs number from September. So to give you some context, that's late. October's not coming. November will come, but after the fact, after it's due. So the data is relatively known, but not digested by the market officially yet. So you could have an oversized reaction to an underimportant number. Generally speaking, this number is not, this time of year, this number is not that important, but it could be important. There's a lot of fog around it, but by the time you see this, that number will be out. And you can see the markets have been, this has been a contributor to the markets and doing what they're doing. Today, we're going to cover Russian gold. Putin steps up deals, citing rising market liquidity in gold. These are words that are just platitudes that you see in stories, but they actually have a meaning. And the meaning is that the depth of the Russian domestic gold market is increasing because more Russians are owning gold. And because of that, you have more back and forth at the government level of buying and selling. And because of that, you have depth and reliability and pricing power. And so Russia is now stepping into the idea that what China is doing. Everyone owns their gold in Russia. Russia owns gold through its people. And you create a deep domestic market, a trading pit, so to speak. And you build it out by encouraging people to own gold. And you buy and sell, and you create a marketplace. And when you create that marketplace, and it has enough depth and power, like China's, you start broadcasting it out. So I would leave this to you before I actually get into the report. China owns gold through its people and is now projecting its price outward. Russia, which is really not allowed to project its price outward because of the sanctions, nonetheless is creating a deep, robust domestic market. And that market, whether it's allowed to broadcast out directly or not, will be broadcasting out directly for all the nations that don't sanction it. So the BRICS will have the St. Petersburg Exchange and the Shanghai Exchange and Dubai Exchange to compete with the LBMA, which is hobbled at best and crippled at worst, or dead at worst, depending on how you look at it. So I'm spending a minute on this because this is a plan. This isn't random news items. This is a plan. China liberalizing gold ownership. Everyone in China owns gold now. China putting vaults outside of China. That's seeding the BRICS with collateral ability. That's seeding the Belt and Road Initiative with the collateral that will create the circular movement of the yuan. Russia, okay, having been on essentially a gold standard in terms of collateral since 22 and probably prior because of their own planning, is now telling its people, you need to own gold. They're including their people in their plans, not because these nations love their people, maybe they do, but because they recognize that to project power externally, you must consolidate power internally. And that means creating reliable markets that other nations can look at with envy, saying our pricing power is just as important as yours. We don't care about your markets and your pricing anymore. separate but equal. That's the way the world is. So now when you take what I just described to you and you pop it in this sort of a context, China is warranting all the Shanghai futures gold, saying this gold's not for you, this gold is our gold, and we're going to use it for something. And Hong Kong opens a vault that's part of the BRICS SGEI initiative, the vaulting thing that I described, the golden corridor, um, several months ago. And then you look at Russia starting its own gold exchange, which is, nobody cares about. It's one story in the West, and then it's over. But then they have their people buying gold now, and everyone's buying gold, and they have their own standards separate from the LBMA. And then, and here's the kicker: still no one has covered this yet, but maybe it's not important. But Russia has been exporting and selling gold in order to have currency to survive. You need currency, right? So they sell their gold to Uzbekistan, to Kazakhstan, and Armenia. And Armenia, Uzbekistan, and Kazakhstan then sell it to London, or maybe they sell it to London. And so the currency flows that way. Gold is used to circumvent the sanctions, period. And that's the way it is, because gold's actually neutral collateral. It doesn't care about your sanctions. But this year, Russia has sold almost no gold. So they're not selling gold to get currency. Do they have enough currency? Maybe. Are they selling the gold to China privately? Maybe. But they're not selling it publicly. And their balance sheet for their central bank data is not going up by their production. And they produce about 330 tons a year. So you got China with gold that's spoken for. You've got Russia with gold that seems to have disappeared. And you've got both nations creating deeper markets. We're going to have an HQLA repo competition here, and it's going to be the U.S. dollar as a currency for the store of value U.S. Treasuries versus the BRICS currencies, multipolar, with the yuan in the lead. And the BRICS currency store value will be gold. And that's the future. So that's the whole long version, because it's important. And it was given like a 150 or 200 word story by Reuters. And we wrote it up and elaborated on it just in the way that you heard. Anyway, markets. 10-year yields up 1, the dollar up 20, S&P 500 up 50, NASDAQ up 60, VIX down 3. That's a lot. Gold up 13, Whippy overnight. $20 either way is nothing now, right? Okay. Silver down 3-4 cents. That's a coincidence. It could be up 40, down 40, at 51.23. Copper at 500 even. It seems to be like 4,050 and $5 are the levels for metals right now. And that is kind of what happens when you're waiting for real data or information. Copper $5, WTI $60, up 46 cents. Natural gas 440, Bitcoin 92, went down I think as low as 88 and change. It's taken some hits, but let's see what's going on here. Ethereum 3,000, palladium up 21, platinum up 16, gold, silver hovering under 80, and grains are all mildly stronger. Okay, so let's actually cover the story now that I've given you all the context. Russia's central bank said Wednesday that its gold operations in the domestic market have increased sharply as liquidity improves and sanctions force the state to rely more heavily on yuan and gold to manage fiscal reserves. The shift signals a larger structural turn inside Russia's financial system, where gold is taking on renewed transactional and business importance. Now, Russia is accelerating its shift into gold as sanctions, which are never going to change, maybe never going to change, yuan dependence. They need to use yuan now to transact with the rest of the world. A third to half of the world's cut off from Russia, and yet they continue to exist and wage war. So how effective are sanctions? They're not. The central bank told Reuters its gold transactions for the National Wealth Fund have increased sharply. That's their marketplace for domestic buying and selling of gold. They describe the yuan and gold as the fund's only remaining liquid assets. This is Russia putting it out there. We're letting you know that, framing it for the G7, your sanctions have forced us to do this, and so don't blame us. At the same time, Russia has stopped exporting gold. That's us reporting on a SocGen analysis. Reuters is not reporting on that. Building what may be the base stock for a new Eurasian market structure. Domestic turnover is rising alongside global prices, allowing the bank to execute larger operations inside Russia. Official reserves now account for 41% of Russia's FX reserves, underscoring a structural monetary pivot already underway. China is issuing US denominated bonds, and Russia is issuing yuan denominated bonds. So they all know what they're doing. The world's splitting up. That's all. And Russia's part of the world again, even if China is their banker. Okay, so it's just, sorry, moving on. Related post, Data Fox September jobs preview. It's 8:18 now. Intraday comment or reversals of kind of like an end-of-day comment for yesterday. Goldfix PM, Founders First Look. That is the, Deutsche Bank put out a recent report, very recent report, saying that they're noticing and doubling down on the inelasticity of demand. At the same time that Goldman came out with a comment to the effect that interesting that central banks are buying and now they're competing with ETFs. So both of those reports together say to me that we're basing at a higher level. And this weekend we're going to put out a breakdown of the Deutsche Bank report because we think it's important, because it vindicates something that we had said 6 months ago, and that is, or maybe 18 months ago, or probably both, and that is that the inelastic demand for gold is an implication that all countries, especially the BRICS most obviously, are printing money to buy gold. They're not printing money and then budgeting for gold. They're printing money to buy gold, literally. All right, moving on. There's a chat, breaking Indonesia tariffs, gold exports, and the Economist says, beware the scorching gold rally. And there's the chat room, and there's the actual data that's supposed to come out today. Yesterday was the Fed meeting. That was one of the reasons the market was whippy back and forth. It's kind of conflicting what came out of that meeting, but I think we are where we are because this is it. All right, so the nervous people are buying gold. Look, I think everyone's looking for excuses to buy dips in gold now. And unless there's a news item that sticks, dips will continue to be bought at the bottom part of that range. And someone is keeping a lid on it at the top part. I'm Vince. Have a great day.
Well, thank you, Vincent, for another wonderful morning show. And thank you at home for watching. Sure appreciate you being here and spending part of your day on the Arcadia Economics YouTube channel. If you didn't already do so, go ahead and hit the subscribe button so that as Vince continues to lay out what is going to happen in the gold and silver markets, much like he's been talking about the mercantile environment that we're seeing play out now with Indonesia putting a tariff on their gold exports, China restricting their silver exports, and all the other stuff that's happening that we get to watch along as we all await our $2,000 government checks, which fortunately I'm guessing everyone watching has a much better way to use that $2,000 and leave it in fiat currency. So we'll keep you posted on that. And real quick before we wrap up, did just want to thank Fortuna Mining, who, as you might imagine, had a very strong third quarter, which they just released the results of about 2 weeks ago now. And one of the things that's really exciting is that as they're benefiting from also focusing on lower cost ounces while the gold price is elevated, they've ended up with quite a liquidity position. They're working towards reaching a construction decision at their Diamba Sud gold project. And I did have Jorge Ganoza, the CEO of Fortuna, on the show about a week ago to talk about the third quarter. And here's a quick comment from Jorge on their latest results.
We're very excited about where we see the company today. As we've shown quarter after quarter, the business is performing well. we're really capturing the benefits of this high price environment. As you just pointed out, we are increasing our margins, increasing our free cash flow generation. And more importantly, we are set up to continue with our next leg of growth, relying on exploration success within the portfolio and the advancement of the Ambasud, which will be our next gold mine. And we published not only the PEA results, which I'm sure we're going to dig into, which shows a project with very robust economics. We are looking forward to make that construction decision early next year. But we are also advancing the project on the permitting side, fast-tracking it. And again, at the same time, the business is running on all engines and expanding margins. We're generating very healthy free cash flow.
Well, thank you, Jorge. Always great to have him on the show. In the midst of an environment where we see the elevated gold price, a lot of people wanting to capture that rally, I think it's really helpful to have a company that you've seen lay out what they're going to do and then execute on it. Of course, do your due diligence, and that's why we have Jorge on the show, so that you can hear what they're doing. Also, always good to contact them, which you can see up there at the contact tab at fortunamining.com. And in case you missed the full interview with Jorge, well, that one is coming your way now.